As election seasons sweep across the nation, an unseen undercurrent of anxiety ripples through the housing market. Dat quai James fee, ad digial ve. But in South for now, I'll say. For countless homebuyers and investors, the ballot box isn't just about leadership. It's about the very foundation of their financial future. Every headline, every poll, feels like a tremor threatening the stability of their most significant investment, their home. One of the most immediate and tangible impacts is on mortgage rates. Political rhetoric and policy proposals can create wild swings, directly affecting affordability and borrowing power. A slight shift can mean thousands more over the life of a loan, leaving many to wonder if they should act or wait. This volatility demands data-driven clarity. Beyond rates, amplified economic news during elections profoundly influences buyer and seller confidence. Debates on inflation, employment, and fiscal policy directly translate into market uncertainty, causing some to freeze, others to panic, and a few to spot overlooked opportunities. For families, this isn't abstract economics. It's about their monthly budget, their ability to save, and the dream of homeownership. Every political promise feels intensely personal, demanding meticulous financial planning. The housing market, typically a bedrock of stability, can become a rollercoaster volatility during these times. Peaks and troughs, driven by real economic shifts and perceived political risk, make forecasting dizzying. It challenges even seasoned investors to discern signal from noise. For real estate investors, the political climate presents a unique kind of stress. Capital deployment and portfolio strategy hinge on deciphering potential policy changes. It's a high-stakes game, where understanding political currents is as crucial as property fundamental. Looking back, the narrative of elections impacting real estate is far from novel. Historical cycles reveal a consistent pattern. Shifts in political leadership often precede significant market movement. From landmark legislation to subtle regulatory changes, echoes of past decisions still resonate. Consider housing starts. Governments, driven by promises of economic growth or affordability, implement policies that incentivize or hinder new construction. Permitting processes, zoning, and infrastructure are levers of political will dictating home supply. Historical property news often reveals clear correlations. Whether post-war housing booms from government-backed loans or stagnation linked to credit crunches, media archives paint how political actions shape property values over decades. When political winds shift, ambitious construction projects can grind to a halt. Regulatory uncertainty or changes in tax incentives leave steel skeletons as stark reminders of plans derailed. This impacts labor markets and overall housing supply. Conversely, stable political environments and growth-oriented policies foster thriving communities. Strategic urban planning, infrastructure investment, and supportive housing programs lead to increased property values and robust market. These communities become beacons of stability, demonstrating how thoughtful governance translates into tangible value for every homeowner, fostering sustained growth and a positive feedback loop. At the heart of the housing market's responsiveness to elections lies the central bank. Their actions on interest rates are profoundly influenced by economic and political landscape. These decisions directly ripple through to mortgage rates, shaping buyer affordability and investment returns. Beyond interest rates, any administration's legislative agenda can reshape the housing landscape. New bills on zoning, environmental regulations, or construction standards are blueprints for future market conditions. A stroke of a pen can unlock new development or impose significant costs, altering supply, demand, and prices. Tax policies are powerful instruments. Administrations can introduce or revoke incentives, like first-time homebuyer credits or property tax deductions, fundamentally shifting the financial calculus for individuals and institutional investors. Affordable housing initiatives also fall under the political umbrella, with governments committing funds to subsidize construction, implement rent controls, or provide grants. These efforts aim to tackle critical social issues and expand homeownership, profoundly impacting not just supply, but accessibility and equity within communities. Such policies are deeply tied to electoral platforms and social goals, reflecting a broader commitment to housing access. Every administration undertakes regular reviews of property regulation. Changes to landlord-tenant laws, building codes, or environmental standards significantly affect property valuations and operational costs for investors. Staying informed about these shifts is paramount for prudent real estate decision-making. As voters cast ballots, they indirectly signal collective hopes and fears for the economy, profoundly impacting the housing market's psychological landscape. Election outcomes can trigger immediate shifts in buyer and seller confidence, often driven by emotional responses to projected changes. For first-time homebuyers, each election brings a fresh wave of hope and potential disappointment. Promises of lower interest rates or down payment assistance can ignite a rush, while uncertainty leads to painful delays. On the rental side, political shifts, often tied to economic forecasts or population trends, can lead to fluctuations in demand. Policies affecting job growth or urban development directly influence where people seek to rent. Then there are moments of palpable energy when favorable political climates or strong economic indicators send crowds flocking to open houses. This competitive fervor, fueled by optimism and FOMO, drives prices higher and shortens listing time. At a broader scale, city growth is intrinsically linked to consistent political vision and strategic investment. Time lapses of urban expansion represent decades of policy decisions on infrastructure, zoning, and economic development, shaping real estate opportunities. Steady governance paves the way for sustained, healthy market expansion. Beneath soaring skylines, diverse residential streets form the bedrock of local markets. Policies on property taxes, public services, and community development disproportionately affect neighborhoods, influencing school quality and amenities, and ultimately, property value. Every policy has a ripple effect. The health of local businesses often directly correlates with the vibrancy of the surrounding housing market. When political decisions create economic headwinds, Main Street suffers, leading to job losses and reduced local housing demand. Where supportive policies and a stable economic outlook converge, successful property developments transform landscapes. These projects provide housing, stimulate local economies, create jobs, and enhance infrastructure, driving sustained growth and long-term value. This positive cycle benefits residents and investors alike. Navigating these intricate market dynamics demands more than intuition. It requires rigorous comparative market analysis, solid data on local trends, and how policies influence supply and demand becomes the cornerstone of informed decision-making, cutting through political noise. Political seasons often amplify investor decision anxiety. The fear of making the wrong move or missing a fleeting opportunity can lead to paralysis or impulsive action. In uncertain times, many investors seek collective wisdom through group discussion. While collaboration is powerful, it carries the risk of herd mentality, where emotions and shared biases can outweigh objective analysis. This heightened emotional state often fuels irrational market behavior. Prices can detach from intrinsic value, driven by speculation, fear, or over-optimism. Understanding these cognitive biases is key to avoiding costly mistakes. Financial stress, even amidst political turbulence, can be mitigated. By adopting a calm, data-driven approach and understanding fundamentals, investors can navigate volatility, The goal isn't to predict political outcomes, but to build a portfolio resilient to them. Recognizing your own cognitive biases, confirmation bias, anchoring, herd mentality is the first step toward overcoming them. True market mastery comes from decisions based on solid analysis, not emotional reaction. It's about seeing the market as it is. In a politically charged housing market, seeking professional guidance from a seasoned financial advisor is essential. They help you sift through the noise, understand risk, and align goals with market realities, regardless of who is in office. Diversifying your property portfolio is a powerful shield against political volatility. Spreading investments across different asset classes, locations, or property types reduces exposure to any single policy change or localized economic shock. History consistently shows that real estate thrives over the long term, smoothing out short-term political cycles. Adopting a long-term investment horizon allows you to ride out temporary volatility, benefiting from consistent appreciation. For rental properties, professional management becomes even more vital. Understanding and adapting to shifts in tenant rights, property taxes, and local regulations ensures your investment remains compliant and profitable. Ultimately, the most powerful tool in your arsenal is sophisticated real estate data analysis. Beyond headlines and political predictions, solid data on demographics, supply, demand, and economic indicators provides an objective compass. This allows informed decisions resilient to transient political cycles, fostering predictable growth. While domestic elections dominate headlines, global economic forecasts also exert profound influence on local housing markets. International capital flows, supply chain dynamics, and geopolitical stability often dictate larger economic trends, shaping national policies. True foresight demands a holistic view. Beneath political cycles, powerful demographic trends silently reshape housing demand. Population growth, migration patterns, and evolving household structures are fundamental drivers determining who needs housing, where, and what kind, independently of short-term political whims. Looking ahead, sustainable housing solutions present an increasingly resilient investment path. Properties built with energy efficiency, eco-friendly materials, and smart technologies retain higher value, driven by consumer preference and long-term cost saving. The evolution of smart city infrastructure also offers enduring real estate value. Investments in public transport and digital connectivity create desirable locations, fostering growth beyond any single election cycle. Navigating the housing market's political rollercoaster isn't about ignoring uncertainty, but embracing it with informed confidence. With the right strategy, you turn potential risks into tangible opportunities, building lasting wealth that withstands any political tide. Ultimately, real estate is about more than numbers. It's about the security and stability of a home, where families thrive and legacies are built. Our mission at Keystone Property Advisors is to empower you to achieve that stability, providing the insights and strategies you need. At Keystone Property Advisors, we cut through political noise, analyzing market data and investor psychology to provide clarity. We believe that with deep understanding and strategic foresight, every election cycle can be an opportunity. Our team empowers you with personalized insights, robust strategies, and confidence to make sound real estate decisions, ensuring resilient investments and a secure financial future. This is about building lasting wealth, one informed decision at a time. Your next successful property deal is within reach, even in a complex political landscape. Let us help you navigate it. Together, we build a future of sustained financial prosperity, securing your home and investments against inevitable political shift. It's about empowering you with knowledge and a robust strategy to thrive, no matter the political climate or economic headwinds, creating true long-term value. Don't leave your real estate destiny to chance. Subscribe to Keystone Property Advisors for more in-depth analysis and expert guidance on building lasting wealth through real estate. Your journey to property success starts here.